guys, good morning. Hi Kelly, how are you doing?
Great. How are you?
Good. I'm excited because we're here together again, which is so cool. Today our topic is going to be all you need to know about the VA home loans. We're going to answer a lot of questions we receive usually from our buyers that are military members, and maybe gonna let you guys know exactly who can qualify, what are the guidelines, what are the requirements. So first, Kelly's going to give us a little summary about our last episode.
Yep. Basically, last week we talked about getting prepared for the spring market. And just to summarize it, it is to give me a call or your lender a call to do a free consultation to see where you're at with your expenses. If you're self-employed, it's gathering all your tax returns together, because most lenders aren't going to be able to lend unless you filed your taxes. Now that we're in January, have until the 15th of April to do it, but that's super important. So really it's just preparing yourself for the spring market, getting your expenses in line and making sure that you have the cash for your down payment and your closing costs. So it all matters.
Yeah, very important stuff for sure. Yeah, thank you, Kelly. So going a little bit into our topic of the day, we're going to talk about our myth of the day. So today's myth is related to our topic, which is the VA. A lot of people think that VA loans can only be used once, and that is definitely a big myth. Maybe Kelly can give us a little more of a breakdown on that too.
Yes. So I get that question a lot, and you can use it more than once. And it's as long as when we pull your certificate of eligibility and we see that you have the eligibility, as long as that has been satisfied on your first loan. If you purchase a home, your first home VA, and it's satisfied, that means, if you sell that home and it's paid off with somebody else purchasing the house, that frees up your eligibility to purchase another home.
Correct.
Or it works the same with refinancing. So because you're satisfying
the previous one,
and you get a new VA loan. But the only thing is, every time you do it, the fee to do it does go up. So that funding fee that you pay for a VA, that does increase over time.
Correct. Yeah.
So I don't know if you can elaborate a little bit more.
Yeah. So you can use the VA multiple times. It has to be a primary residence every time. Reason why she was talking about having to satisfy the original loan or the previous one first is because of that. Because the VA loans only can be used once at a time, but multiple times. So if you purchase your first home with a VA and now you're ready to purchase a second one, yes, you are allowed to use a VA again, but you do have to sell your property in order to purchase the new one and use VA eligibility once more. But then the VA funding fee will go up, slightly every time you use. So, we have to see if it makes sense for you. If you are in your third, fourth home, sometimes if you don't need to use the VA benefits, you might probably not want to, because at that point it gets pretty expensive. And we're going to break it down how the VA funding fee applies to your loan a little bit later. But basically, the first time around, you will have a set amount. The second time is going to be a little higher, and so on and so on. But always has to be a primary residence. So a lot of people think that you could potentially buy, investment properties with a VA loan. That is not true. You cannot. That's maybe another myth as well. VA loan is only for your primary residence. So let's get into then our topic, which is just really explaining all about VA. And maybe we're talking VA here loans, and some people don't even know what that is, right? So VA loan is a benefit for military personnel. So if you have served, for a certain amount of time, you are eligible to use the VA home loan benefit to purchase your primary residence, your new home. Some of the benefits of the VA, and maybe Kelly can go down some of them, and I'll help assist in that too. The first one would be the no down payment, right? So
Correct. And this isn't really a myth, but no down payment means if your purchase price is $100,000, your loan amount will be 100,000. So no down payment required. If you want to put money down, you can.
Yeah.
Like some people, I've had that question asked to me, like, can I put money down? You absolutely, if you have the money to put down, yes. But the benefit to having the VA loan is not having to have a down payment. You do have your closing costs that you still need to pay for.
Yes, that's another one. A lot of people, so a lot of military people say, hey, I'm going to buy a home and I want to use my VA loan benefit. There's no down payment, so zero money down. I'm like, yeah, that's right. But then we run the numbers and then they have to pay, I don't know, $8,000. They're like, wait, but it was no money down, like no money down payment.
Correct.
But you still have closing costs. They are limited costs, but they are still there. So maybe another myth. There's a lot of myths around the VA. So
Yes.
when we're going through this, but yeah, so the no down payment is just that you're financing the full amount of the purchase of the home that you're going for, but there are still closing costs associated with that purchase. Maybe another benefit that usually VA home loans will give to the buyers is more competitive rates. Right now, we're not seeing that much of a difference because of how the market is. But overall, we usually do see more competitive rates, so lower interest rates for buyers using the VA home loan benefit than others would be getting.
Yeah. So, and like she said, with the closing costs, they usually are a little bit less than what a non-VA loan would be, because as a lender, we can only charge so much. We do offer what's called an IRRL.
There's 3 R's there.
Interest rate reduction. I don't even know the full thing.
The lower interest rate reduction.
Interest rate
I don't even know.
reduction,
Yeah, something like that.
So
we'll get back to you.
With that one, like there's no appraisal required, and really there's not much that needs to be done with the IRRL loan. But the closing cost is a big one with that one because, obviously no appraisal. You don't have to pay for the appraisal. But even with the regular VA loan, we can only charge up to 1% of the loan amount. So any of our lender fees, they're included in that 1%.
Correct.
To purchase a house. So there are closing costs. They're not quite as high, but yes, 0% down. But you will have most likely a few thousand with closing costs. And we spoke about closing costs in the last couple of episodes.
Yeah.
The biggest portion of closing costs are your settlement charges to the title company. So again, please look at those. Please watch those videos to see what those costs are.
Yeah.
So can you elaborate any more? I don't feel like there's too much more.
No. Yeah, there's some fees, like some additional fees. For example, a broker fee will not be able to be charged to you as the buyer. You're not allowed to pay any sort of commission. There's like some settlement fees that are not allowed to be charged in addition to your already origination fee. So there's a lot of fees that you're not allowed to be charged when you're using your VA loan. So your closing costs do get it's like a limited amount, which is a huge benefit because closing costs can add up depending on who you're working with. I know working with Kelly, you already have a pretty limited amount of closing costs overall, so they don't really charge anything that is above and beyond. But some lenders would. So when you use your VA benefit, you are automatically keeping yourself protected in a way that they are not allowed to charge you anything extra. So that's kind of like a huge benefit. Getting into another benefit as well with the VA loan would be the PMI. I'll let you explain more about what is the PMI and how does that apply. Usually in the VA loan we don't have it. So
yeah, VA loans, the private mortgage insurance is the insurance you pay to the lender because you're not putting a certain amount down on your loan.
Yeah.
So on a VA loan, you do not pay that at all. You do pay if you're less than 10% disabled, you do pay the funding fee, which goes along with the VA loan, and that gets financed into your loan. And you can see that broken out on the fee estimate, but private mortgage insurance, you do not pay. So that's that benefit to putting no money down, no private mortgage insurance. So there's no addition to your payment with that. And we can get into the whole funding fee
Yeah. So
Um,
just to kind of branch out a little more on the PMI side, and private mortgage insurance, every time a buyer borrows more than 80% of the value of that home, meaning they're putting less than 20% down payment, that loan is automatically going to have PMI, private mortgage insurance, because it's a higher liability type of loan to the bank. They're giving you so much more money, towards that, close to that value of the property. So there's more liability to the bank. So they charge you that private mortgage insurance. Once you have paid down to automatically 78%, but usually it's 80% of the value of the home, then the PMI drops off and your mortgage payment gets smaller.
correct.
On a VA loan, you never have that. Even if you're there, you are, technically financing the full 100% of the purchase price. So there's a huge liability, but because VA are backed by the government, you do have this benefit of not having the private mortgage insurance applied to your monthly payments. So on average, you're seeing about 100, sometimes more than $100 a month
Mhm.
on your mortgage payments saved because you don't have PMI. So that's a pretty big benefit. So when you compare, exactly the same amount purchase price on a VA loan and a regular loan that is less than 20% down payment, you're going to notice at least $150 on average, on amount, because, and of course this varies based on purchase price, but you will have a difference there because of the PMI not being there.
Correct.
Now going into the VA funding fee that Kelly brought it up. So the VA funding fee, like we said, is something that's always going to be charged to any buyer using the VA home benefit. And I will say not every buyer, there's exceptions, but overall it's charged to the buyer. And that funding fee is actually financed. So it's not going to be part of your closing costs, it's actually going to be added to the loan amount. So for example, if you're buying a house for $200,000 and your funding fee happens to be $6,500, so $6,000 and $500, $6,500. So your finance amount will be $206,500. And then that's going to be the loan amount. So it doesn't go to your closing costs, it goes to your financed amount.
Correct.
Now, there's an exception, and Kelly can mention that.
Yep. The exception is if you are 10% or more disabled, that fee is not required to be paid.
It's
So
waived,
it is waived completely. And in most cases, I'm not sure what makes the 10%.
It
number.
depends on the actual service. And so if the soldier would know, like the military member would know how much percentage of disability they have, because they are notified that once they are, either out of service, or if they are still in service, if they were, released from duty because of a certain injury they had, they're going to receive an actual, document that states what kind of percentage of disability they have, medical disability they receive, because they do get paid on that too, technically.
Right. Correct.
So they would know.
So that's what brings us into our next piece.
Mhm.
So with the funding fee, me as the lender, I'm able to pull one of the big things that we need to get, the main things we need to get for a veteran when they're looking for a VA loan, is their certificate of eligibility. And I, as a lender, can pull that.
Mhm.
I just need sometimes all I need is date of birth and social security number. Sometimes I do need to know a little bit more, whether you're active duty, which branch we're in, whether you're Army, National Guard, or Army, National Guard, Army, Air Force, sometimes it'll ask me those questions. 9 times out of 10, if I have the social and the date of birth, it'll pull the certificate of eligibility, and it will tell me right on that document whether or not you are disabled and if you are required to pay that funding fee.
Yeah.
And if so, it'll say how much on both. It'll tell me, what your income is for disability, and in the same sentence, it will tell me whether or not you have it or you don't, and it will tell me how much of the funding fee that you'll have to pay.
Correct.
So that certificate of eligibility is super important. That's one of the first things that we do. If you, as the veteran, can't do it, it's the first thing I do. If you're doing a veteran loan, I will look that up immediately.
Yeah. And if you're, you can actually obtain this on your own as well if you're not talking to a loan officer yet. If you haven't reached out to Kelly yet, you can request this on your own. You can go to the va.gov website. It's going to be in the e-benefits portal, and you can request your COE there, the certificate of eligibility. And you do have to have that in order to even apply for the VA loan, to get your pre-approval to start searching for a home. So this is like a requirement. And you can get it any time. It does not expire. So it's not something you have to get it within a certain window of time before you buy a home. No, it's valid forever. It's a lifetime benefit. So once you get your COE, that is there for you to use. I don't know exactly if they have changed anything in regards of having to obtain a new one or update yours. I think after you use the first time, you may get an updated version of your COE, but technically the COE itself never expires.
Yes, if you're doing a second VA loan, it will, I believe it'll tell me
that it has been used
once, and that you're on it's there's not a whole lot of information on that document, but if you've already used it once, it would tell me, because obviously your new funding fee, if you're not exempt from it, will be higher. So it'll say if you've used it in the past, then it'll also say, here's what your eligibility is. So it will give us that information.
Correct. Yeah. And I think that's really as far as the COE goes. As far as who can qualify, so I know there's a lot of confusion, especially for the military members that are part of the National Guard and not necessarily active duty. So if you never served active duty and never got deployed, you actually have to serve a 6 years contract before you are eligible for the VA home benefit. So if for some reason you still in the service, but you're 5 years and you're fully National Guard, you're not quite there yet. You have to serve for an additional year. So you have to have 6 years of service within the National Guard in order to qualify for the VA home loan. Now, if you are a National Guard and you served in a deployment, even if it's a short deployment, but at least 90 days active, then you will become automatically eligible. And if you are active duty contract, then of course you're automatically eligible as well. So just that to clarify that, because a lot of people don't even realize that. They know, military always gets VA, but if you're a National Guard, you do have to have a 6 year of service already done before you can qualify.
Unless you're
medically discharged, then you would.
Or you're put into active duty.
Yes, exactly. If you were deployed for at least 90 days of active status, then yes, you would be eligible for the COE and obtain your VA home benefits.
Correct. So if you become a veteran, and you're only doing it for a few weeks, you're not eligible.
Yes, you gotta. So if you're a National Guard, you have to be 6 years at least. But if you are active duty, you would be entitled to it.
Yes.
And then something that people don't realize too is that the VA home benefit applies also to the spouses and to the children. And something that we just found out when we were doing some research is the caregivers as well. So if for some reason you're a military member and you got medically discharged, and maybe you are disabled to the point you need a caregiver, your caregiver can actually be eligible for the VA benefits as well. There's some criteria, which we're not going to get too much in detail because it's very specific, but that could potentially be something that the person would be eligible as well for caring for a military member.
Correct. So just to clarify, children can't get a VA loan.
No, yeah, there's military benefits. I'm glad you brought that up. Yes.
So children, spouse
can.
So the children, as far as I know, because my dad is a veteran, Apple is the only carrier that will give the children a discount. So yes, my dad has. He wishes he could give it to all of us, but he can't. So, but Apple, you can. But as far as purchasing a house, the spouse is able to use the certificate of eligibility
for the purchase of a home.
For the purchase of a home.
Yeah.
So
that's good. Yeah, thanks for clarifying.
Sure.
I cannot mumble that and get together.
I didn't want people to think,
my children can get VA.
So I can get a VA.
Yeah. Yes, so it's just the spouse, but your children do get VA benefits, not VA home purchase benefit, right? So that's the big difference there. Okay, so let's say now you guys have gone through the process of getting your pre-qualification with Kelly and you have your approval for a VA home loan and we are under contract. There are some criteria for the VA loan financing portion in regards of inspection. So on a VA loan specifically, there are some requirements when it comes to a termite inspection for any home. So every home would have to have a termite inspection done. And used to be that the buyer, the military members himself, could not pay for that inspection, but now that has changed, and the buyer can pay. They used to force the seller to do it, so it was kind of a little bit of a disadvantage to the buyer because they might not want to work with a VA member because they have to pay, so there was a lot of that. So they changed it. Now the VA buyer can pay for their own inspection. The termite inspections are very inexpensive. I mean, you can probably get it for $100, but
that fee has to be paid up front, though, correct?
Yeah, it's paid directly to the inspector at the time of service, and that has to be done in the beginning, the very beginning. Like we have to have that before it goes to the final underwriting, so it has to be on file. If the property has a well on site, so it has a private well, we would have to have a water test done. That's another requirement by the VA. So if you don't have public water and the house you're purchasing has a well, you would have to test the water. And then there's some specific guidelines, and there's a specific test actually that has to happen with the water to hit some specific things that the VA is looking for. So if it is not within those guidelines, all the measurements, the levels that they require, then we have to do something to bring the water to that level. So I think those are the only two really that are required by the VA. Of course, if there's a septic on site, it's always good to get the septic tested. They strongly recommend it because this could be a huge expense, but it's not required by the VA financing itself. The only two are the termite and the water testing if there's a well. Yeah. Anything that you can add to it in regards to the financing portion, like the process itself? Is there anything in particular that is different?
The process is, I feel like all of our processes are fairly easy and fairly, that's what you have me for. Mm-hmm. It's no different than any other loan that goes through. It's, obviously you have your benefits with being the veteran, but I don't know if there's really anything else other than
I guess the appraisal. The
appraisal, yeah.
So there's a specific appraiser for VA, and they are looking for a more specific guideline, I guess, when it comes to an appraiser coming to the property to inspect. Because as you probably saw in our previous episodes, we mentioned that there's home buyer inspection and there's appraisal. And the appraiser, when they come to the property, they will also do their own inspection.
Yes, it's similar to like an FHA because of it being government. So
they are a little more pickier as far as the property goes. Yeah, they're looking for some more things than, let's say, a conventional appraiser. So
I don't know that they're quite as picky as FHA, but they are a little bit more picky than a conventional loan because of it being government.
Yeah.
But really not. I don't want to say, I'd probably say that, and somebody will do a VA loan and they'll be that strict on them,
Yeah. Usually, from my experience, they're pretty strict as far as very keen on any exposed signs of rotten wood. They're pretty picky on that. If the property was built before 1978, they're going to be looking for peeling paint everywhere. So even if it's not lead-based paint, but it looks like it's peeling off, they will probably bring that up and completely stop the process. So we have to send it down, repaint it, and then the appraiser will come back. So they can be a little more strict on some things. The majority of times on a conventional appraiser, we wouldn't be seeing anything about it. So peeling paint is huge. Rotten wood is huge. Structures like decks, anything on the outside of the property is pretty big as well. If the property doesn't have GFCI outlets, which is those outlets that have the breaker on it, the button that you can reset. So those GFCI outlets are mandated in bathrooms, kitchens, laundry rooms, garage. So a lot of people don't even think about that. But when you're walking through a property, your realtor should be looking on at those things for you to kind of like let you know, hey, these are things that most likely are going to come up, during the appraisal, because we know already that you're using a VA home loan. So if you're working with a good realtor, they should already be pointing it out, like, oh, this might not kind of sit well with an appraiser from VA. So there's a lot of little things that are pretty picky on safety. Areas of the house that might be heated properly. There's not heating in a section of the property, they cannot count it as or
How
finished
about fire
square footage.
extinguishers?
Fire extinguishers is a big one, yeah. Handrails is another big one as well.
Handrails,
So any steps have to have at least one side of handrails, and if there's exposed, like there's no wall, it's just exposed. There's a handrail on this side, but not on the exposed side. Guess what? You need to have one there too. So they can be much more pickier than a regular appraiser for a conventional loan, and sometimes even FHA loans. So FHA loans, I think, is a hit or miss, because there are some appraisers that are very strict, and then some appraisers don't ask for things we're like for sure thinking they're gonna ask. So it's a hit or miss. I think VA, it tends to be more consistent in that term, where we usually see things that like, okay, they're probably gonna ask about this, and they end up asking about it. I feel like that's the big difference there.
And I think as long as the realtor is educated on how the house should be, they should be educating the borrower too,
Yeah.
which I know you do.
I usually do, yeah. When we're walking through a property, I'm already pointing out like, oh, this is not GFCI, that is a rock wood exposed there, or this looks like peeling paint, they're probably gonna point it out. So it kind of, at least I let my clients know, that way they know that might be coming up, coming back up during the appraisal, so they know what to expect. And also, like, if there's too much that I feel like potentially that property would really not go VA, or could potentially have a default through because the sellers are already not willing to work, from the beginning, then I'm going to tell my client, look, let's just save your time, because if it's too much work, and it's not really a VA candidate property, we might just look for something better. And I will let you know, just so you know that information, and you can make a decision at that point. Do I really want this house or not? So there's a lot that goes into it, but being informed, I think that's huge. Let me take the COE off, because we already talked about it. But yeah, so inspections during the appraisal process, they are definitely a little more strict on the VA loan purchase process. Yeah.
Yep. And I think the only thing we really have left is the construction.
Yeah, construction purchase. So a lot of my clients will ask me, like, they are eligible for the VA home loan benefit, is what if I want to build a new home? Can I use VA loan benefit for that? The answer is yes and no, right? There's no such a thing as a VA construction loan, but there are ways to go about it. Some, depending on which lender you're working with, they may have different programs that can assist you with, but there's no VA construction loan. So just to give maybe a breakdown of how a new construction process would usually go, right? If you are building on the plan, like you actually want to build a new home from ground up, and I'm not talking about those community homes where they are already building, they might have already under construction, because those can be a little different. Usually you can actually purchase a home that is under construction and have just a one-time settlement when it's ready, and then it's going to be a regular loan, and you can actually use VA for that, right? So that's a different scenario. But let's say you're looking to buy a land and then have a custom builder build on it. That is different, because there's no VA construction loan for that. So you would have to get a separate loan to purchase the land, and then have a construction loan throughout the construction period to pay the builder. And those construction loans have to be VA approved builders in order for you to use the VA loan as the and mortgage after the house is built. Maybe you can even give me more insight on that, because I know you were working right on the construction in a previous life.
Yes, when I first started, when I first became a loan officer, I was a construction loan specialist, and we didn't offer VA loans as part of it. We were two-time construction. It was a one closed construction. So when you build a home, In this case, I only did custom homes. So my buyers already had land and they already had their builder picked out. And during the construction phase, so you settle up front on the house. The house is not built yet, but during the construction piece of it, that builder is paid on phases. So as each phase is being completed, the builder gets paid if it's done. We would send a title company out, make sure the builder didn't put any liens on the property, make sure the construction was done. We'd issue the payment, and at that time, the borrower would start paying interest on the pieces of the construction that was done. So there's normally four to seven phases during construction. Every house is different, so there could be more or less depending on the home.
Yeah.
But there's that construction phase, and then once it's done, we would modify the loan into a permanent mortgage. But the closing was already done, so that's how our construction loans worked. Whereas
with VA, you cannot do that.
You can't do that. And a lot of times, if you're building in a community, some builders just put up the houses and then sell them. In that case, you can get a lender to do a VA loan. But if you're looking to purchase a home, the land, the construction, VAs don't offer that construction portion to be financed. That would have to be done through another lender. There are lenders out there that still do that.
Yeah.
With the crash of 08, they kind of got, there's not as many lenders that do that as there used to be.
Yeah.
But they're still out there. So in my case, I would do the end loan. So I currently have one right now. He's not a veteran, but they're building a house. They had the land, and when it's done, when it gets close to the end, we're going to have an appraisal done, but not until like a month before it's done. And in that case, we could do an end loan for VA. Whereas if it was like the whole construction piece of it, we wouldn't be able to do VA.
Yeah.
But we don't offer construction loans. So.
Yeah. So you'd have to look for a lender that actually offers a construction loan. If you're looking, for example, if you're looking to buy land and then start building right away, there's options out there. It's not with Kelly, unfortunately, but there's options out there where you can do a one-time settlement where that settlement will be done prior to the beginning of the construction phase. And then it would include the land purchase, the actual purchase of the home up front, or what they expect the price to be. And you do a one-time settlement at the purchase of the land time period. But then with that purchase, you're actually getting a construction loan where during the time of building, that builder would receive those phase payments like Kelly was mentioning, and you as the buyer would pay interest payments only based on the amount that's being given at that point up until when the house is ready, and then that construction loan turns into an end loan, which then can be a VA loan. Now, the reason why we can't do VA during the construction is because VA can only be for an existing home. So that's really the biggest pet peeve with VA, right? So you would have to get that construction loan. So that's one way. You can't do a one-time settlement up front if you're looking to do a custom build with your own land. Now, if you are looking to just buy land and eventually build, you cannot use VA to buy land either. Again, it has to be an existing home. So you would have to get a land loan, which has its own requirements. So you have to keep in mind when you're doing this, you will have like two settlements, so two sets of closing costs. So it can be a little more when you're going on the new construction route. So if you are planning on building new construction and you are happen to be a military, there is incentives from different construction lenders out there that will maybe allow you to put a certain amount down only because they know you are zero money down technically. So you put a chunkier deposit to do it before they start the build. They will do interest payments only for you throughout the build, and then you'll turn your loan into a VA. Technically with no down payment, but you would still have to have that chunk deposit up front to cover your closing costs technically when the loan is, becoming the end loan of a VA actually. So there's different things you can do. If you want to go to that route, get in touch with me. And unfortunately, Kelly cannot help with new construction, not the building process anyway, not anymore. or yet with Sierra
No,
Pacific.
I don't.
We don't know
think
if
we
that's
will.
ever going to change.
Yeah, I don't. Most likely not. So we are fighting to get PHFA. So construction
HFA is
loans
great, yeah.
are
Another animal.
it's completely different.
I do have some references, so so if you are interested in that route in particular, I can recommend you to some people to explore that side of things. But if you are purchasing an existing home and you happen to be a military person, you can talk to Kelly and get your AND loan as a VA home loan with those benefits that we explained to you guys today. So that's really all we wanted to go through, right?
Yeah, I think so.
Got something.
Yeah,
on the marks.
I don't have anything else. So basically, the veterans. Thank you for being a veteran.
Yeah, thank you for your service. As some of you know, I did serve myself, never active duty. I was just National Guard for 8 years. So from battle buddy to battle buddies out there, thank you for your service. And I hope to help as many as I can, because this is an amazing benefit, and you will help, especially first-time home buyers. It's a huge help.
Yes.
Considering the reduction on upfront cost, not having that down payment requirement there. So if you are a military member and you know now that you are eligible, reach out and be happy to help you get started. There's a lot that we can do for you to prep you up front if you are planning to buy it anytime this year. Yep. And we have our info going down here. Yep. So get in touch with me, Kelly, and we'll help you out. Thank you so much, guys.
Yep. Thank you. Have a great day.
Thank you. Bye.